Poland avoided the worst of the emerging markets meltdown, which according to some is due to its lower dependence on hot money as well as sound macroeconomic structure. Joining me down the line to discuss what he thinks is the secret to Poland's success is Michael Dubala. Michael, Poland also negotiated the Eurozone crisis with far more ease than some of its European counterparts. The country's solid economic performance, despite the weakness in many of its neighbours, has been largely attributed to internal strength of the economy and significant reforms undertaken in the recent past. Would you agree with this?
Well, indeed. I mean, Poland's economic structure is to some extent different to its regional peers. The country is much less dependent on external demand, which, of course, has been a great support during the post-crisis recession that many Central European neighbors have been experiencing. That's one part of the story. The second part of the story is that Poland is certainly much less dependent on one particular sector. So, therefore, given the relatively diversified, it has been also supportive for maintaining a relatively robust pace of growth. Thirdly, which is also important, Poland is less dependent on just a few number of large FDI-owned companies. The number and the importance and GDP creation of the smaller and medium-sized corporates is much larger than, say, in the Czech Republic or Hungary, which of course means that the economy is much more flexible as these companies are more willing and able to turn around if economic conditions do change or if the government had the sufficient fiscal space to boost public sector investments in particular, which of course have been preventing the emergence of a recession here in Poland. And finally and fifthly, I guess it is the fact that independent monetary policy, both on the interest rate side but also on the exchange rate side, has been providing a substantial buffer, preventing the country from a worse economic outcome than many of its regional peers.
Further evidence of the improving economic outlook going forward is Poland's reduction in budget deficit and stabilising government debt, coupled with Fitch's debt upgrade. However, Poland may not be entirely out of the woods yet, with analysts believing stark improvements in retail sales and IP are essential to ensure sustainable growth. Is this in line with your estimations?
In the near term, Poland does need to see this robust recovery in external demand as growth is largely driven by exports at the moment. But as soon as we move into next year, there's going to be another round of government public investment spending that are going to be largely financed by EU cohesion and structural funds. Moreover, in 2014, the economy should feel some additional tailwinds coming from the recent softening in monetary policy. So I would be relatively optimistic as concerned 2014 in terms of economic growth.
Government Belka recently described inflation as subdued, adding expectations are also well anchored and a period of pretty neutral stance of monetary policy will follow. He declined, however, to say how long that period might last. What sort of time frame are we headed for here, and is inaction the best action for Poland at present?
Well, I'm expecting the policy rate to stay basically unchanged through 2014 with a start of eventual rate hikes coming only in 2015. Well, I would agree very much with the governor. I think inflation is very much subdued and this picture is unlikely to change a lot in 2014. The output gap is still pretty much negative. We are seeing this in a pretty subdued pace of wage growth. There is also no money inflation at the moment, a picture unlikely to change also in 2014. There's going to be, of course, some base effects through headline inflation just at the beginning of the year and also with some higher excise taxes on spirits and tobacco. But that's going to be largely offset by the fall in food prices that we are experiencing essentially across the whole region thanks to a very strong harvest this summer.
Some analysts recommend avoiding the dollar risk and instead focusing on relative value trades such as buying the Polish zloty versus a Czech koruna. To your mind, is this play still attractive? And what is your outlook for the zloty moving forward?
We are looking for zloty appreciation owing to the fact that recovery is gaining steam and that it is going to be driven largely by rising productivity across the manufacturing sector that has been normally very much supportive for the zloty and therefore we see zloty appreciation moving forward. Another argument that plays into the story is steady improvement of Polish terms of trade, reflecting the robust competitiveness of the economy as it stands right now. So that's another factor that should be supportive for the zloty, particularly in a relative value context, comparing it with fundamentals of some other countries or some other currencies in the region here. Looking at our forecast, we indeed expect zloty to appreciate quite substantially against the Czech koruna by more than 6% over the course of the next 6 to 9 months. In terms of the dollar risk, or in terms of generally zloty performance against the major currencies, indeed, I mean, that's quite obvious that at the moment it's the global factors that are in the driver's seat for markets, including emerging markets, including Central and Eastern Europe. But again, as I said, if there is no disaster scenario, neither in terms of global growth, or if there is no sudden and major tightening of monetary policy by the world's major central banks, I think zloty should be faring very well.
Michael, lovely to speak to you today. Thank you very much. Well, viewers, for a look at some more currency forecasts, be sure to tune back in tomorrow for our Targets in Focus interview with my colleague Elaine Stenson. Goodbye for now.